traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Wednesday, July 21st, and this is the Daily Report. Forex Gold currently trading off about $5 at 1187.40, 1186.40, right in that area. Ask bid spread. The market has traded higher today and did get a high roughly on the bid at around 11.99. So the ask was about 1200. So it did go to 1200, did find some resistance, low about 1182.70 this morning. Yesterday, we did take a look at a potential setup for a trade this morning. However, we have received no confirmation whatsoever as of this point and are going to remain flat in the market. What we were looking at was this engulfing bullish here. It's a two-day pattern, but it's one of the stronger bullish reversal patterns. To take that pattern, you do need confirmation, which means that on this trading day, it needs to close higher. Now, it's still currently trading, so it could still turn around. However, to me, that is highly doubtful, but in Forex Gold, we never know. The one thing that I am looking at is when you consider our Fibonacci retracement numbers, and the numbers that I'm looking at, I am drawing our long term from the beginning of wave 1 to the end of wave 5. So in other words, from 1040 to 1265. We have a pretty critical one, which is the 38% Fibonacci retracement number at 1179 right in here. And as you can see, on two occasions we have tested those areas in terms of lows in the market, and it has seemed to hold. If in fact that can hold, what I am looking for is for this corrective phase kind of to work itself out, meaning our A wave to move down here. I would expect a bounce. If this area, this 1179, can hold at this point, what I'm going to look for is going to be a bounce back up, as I said, anywhere to 1221, 1224, somewhere in this area, and then a final corrective C wave down. That's what I'm looking for. However, to get this bounce, we've got to get some kind of an indication that we have hit bottom. Aside from a Fibonacci retracement number, which is just an area where we'd like to see support, we have not seen that in terms of a candlestick pattern showing us either bottom support or bullish reversal. Now, we actually had a fairly interesting evening session over in Asia, London, before we went to New York, and it was trading moderately higher throughout the day. That's throughout the evening, I should say, and that's where we got this market moving up and trading in the 92 and 93 area. According to Kitco News, the COMEX Gold weekends and afternoon trading, and this was following Federal Chairman Bernanke's remarks. It goes on to say that initial reaction by the markets to the Fed chairman's prepared text of remarks was mixed, as the U.S. stock market sold off and U.S. Treasuries rallied. The U.S. dollar index moved higher and to a session high, while crude oil prices sold off, both which added to the downside pressure of gold. Now, I think we have an interesting scenario brewing here. We've got that stress test, and that stress test is in the European Unions with their financial institutions, and what they're doing is you've got a committee of European banking supervisors. They're testing 91 different banks to see whether the banks can withstand a 3% decline in economic growth. And the committee is going to test for what's called sovereign risk at levels beyond the market condition experienced during May. Now, my sentiment is that if we find that the European Union stress test, if the banks are having any kind of issues, we are going to get that bounce, and that bounce will take us, as I said, into that B wave. However, if the test comes out favorable for the banking system, in other words, they come out and they say that, we could get a further decline in the metals market. And if we got that further decline, I would look at this next level, 1153, as a potential target. As I say, right now it is holding very, very well at 1179. And if in fact the market does get its bounce in here, I would look for the market to come, as it's already tested these lows, and then come back up. However, if we had a scenario where the information was perceived in a negative manner, we might get a continuation somewhere to this area here before we got our bounce back up. So traders, it appears for now that we have gone back into choppy trading. I do want to let you know one thing, and that is for us that follow Elliott wave fairly closely, the two waves that we really kind of are a little hesitant of are always going to be our wave A1 and our A wave, the beginning of the impulse and the beginning of the corrective phase. The reason being is that these waves set up our guidelines for the ones which will come afterwards. So that when we have our first wave, we're calculating a certain percentage on this. It's typically a 38% retracement. Wave 3 is typically 1.61 times that of wave 1. Wave 4 is a retracement based on wave 3, and wave 5 again is based on wave 1. When you have the corrective wave, wave A, when we go into our B, we're looking for about a 50% retracement, and C, 1.61 to 2.61 of A. So these are kind of our benchmarks. And so my reluctance right now to kind of get involved is that I don't have a real solid, clear indication of where this market might, in fact, stop. So that if I was absolutely certain that the market was going to head, of course, to 1153, I would say we should obviously be short. But because once we set a benchmark with our A wave, I believe we're going to have really solid, clear indications of both B and C, and those tend to make some sense to me in terms of targets, where to follow, and good solid trade recommendations. We're going to have to see where this market wants to go, obviously. It's going, as I said, back into a choppy scenario. As we saw in here, we did not get any kind of clear confirmation. Traders, I was hoping, because this lines up so well with our Fibonacci retracement and could be a good area of support, that this would hold. We still have superlative resistance right around 1218. So this is the band that we need to see it break one way or the other to determine where we think this market is going to go. As I said, if we get some sort of a scenario where I get a clear bullish reversal indicator, I'm going to play this bounce here. If we break this one particular area, we might in fact initiate a sell signal looking for the market to trade to the 1153 area. Until it breaks one way or the other, though, traders, I am really going to keep ourselves on the sidelines. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. Bye-bye. We'll talk to you tomorrow.